Good morning.
Tim, you are live on Benzinga's pre-market prep. How you doing this morning?
I'm doing good.
All right. Well, here we are in the heart of earnings season here. Market trading at new all-time highs. Big earnings week this week. Just first of all, just give us your overall assessment. Doesn't look like the dollar's hurt the earnings too much for some of these big companies so far.
No, it's huge. I mean, it's a story that they've done a great job of tapping down expectations. Under promise and over deliver. It seems like they've got it down to a science the last few years. Not a whole lot of analysts on the sell side really beat them up over it. And even the big multinationals early last week that you would think would have the biggest problem with the strength of the dollar, Coca-Cola, McDonald's, also a couple of hated stocks. They kind of set the tone by outperforming early in the week, and then a little bit off to the races from there. Tech was clearly the leader. Microsoft, a huge day at the end of the week, up 10% on Friday, I think it was. S&P, new high by less than a point. The Dow Jones behind a little bit, but
coming out of the chat here, Tim, we got Baidu here, Bidu, the Chinese internet company, just kind of quiet, kind of range bound here. Any thoughts
Got a
on?
report Wednesday night
Yeah,
too.
the report on Wednesday. This 220 is kind of sticking out like a sore thumb to me. Any interest or any thoughts on Baidu?
Well, it's Alibaba has certainly struggled since the first month or two of their IPO. Maybe it put in a bottom the last week and a half or so. I don't have. It's kind of been off the radar for a lot of people the last 6 months or so. It's interesting that you bring it up. I just think it might be emblematic of some of the valuation issues going on with some of these Chinese companies.
Yeah, 220 looks like a big level on the upside. All eyes on Apple, ripping into pre-market here, up over $2, 132.34.
Yep.
All-time high, 133.60. All-time closing high, I believe, 133.01. I mean, how can you be short this stock going into these earnings?
Well, you can't. I mean, it's going to take a run at it. Apple's not necessarily a stock that's historically had big post-earnings moves. It's had big announcement moves, maybe big response to sales and revenue from cash levels from time to time. And it seems to be the talk about the stock seems to be focused on new product, the iWatch, to what degree it's really going to catch on. Certainly they've had other product announcements in the past that have taken a quarter or two to really catch on, and look, nobody's going to nobody's going to sell these guys short until they stumble for a couple of quarters in a row.
Yeah,
So,
another thing to bring up too is that sitting on all that cash, and Uncle Carl wants them to increase the dividend or buy back more stock. So I mean that's another thing that's probably keeping me out of the short side on this one. Big Blue. Now, interesting chart last week. I was buying it for technical reasons because it broke out of the 165 level that had just kept a cap on this thing forever. And then the earnings, the earnings were okay. They didn't like revenue declining for the 14th quarter in a row, so they kind of tagged it. But now it's back up here. Are you getting any interest in Big Blue on the floor?
Sure, because it's it's been a laggard. It's trailed for close to 3 years. And no doubt, I mean, they've still got a massive global franchise and one or two indications that they're, on the verge of turning this thing around. They've always had a very, very, very strong service business. And the stock could the stock could make a run at double par if it got a couple things going in its favor.
Tim, what about this trend here lately? I've been talking the last 3-4 days on the show where you're starting to see some of the money, and not including Netflix or Amazon, but you're starting to see some of the money flow from some of the leaders that were over the last month or two, like some of your biotechs, and it's starting to go into some of your laggards. You're actually seeing some of the stocks, like I even noticed like a 20%, quiet little 20% move up in BlackBerry here in the last month. And I mean, IBM has been a laggard here as well, and money's starting to flow there too. Do you think there's this rotation going where people are trying to find the stocks that are going to be coming back here the next? We saw the energy stocks obviously pick up a month ago, but I'm starting to see some of these old technologies, especially after the Microsoft earnings there, starting to pick up some steam too. Do you think that trend can continue?
That certainly that very likely could be the rotation that the market needs a little bit to have a healthy base right around the old highs if it's really going to take make another sustained move higher. I mean, you would certainly think that the market needs a little bit more big cap sponsorship away from biotech, social media, and a few cutting edge internet names if it's really going to have the leadership it needs to make a move higher. So you see that kind of a move in Microsoft. Maybe you see a bottom in IBM. You see some of these. Look what some of these metals and mining stocks have done in the last 3 weeks. They've just been beaten up and left for dead. Cleveland Cliffs, even
right.
Vale. You see, maybe Brazil has bottomed out, and the worst is in there. And if some of the steel stocks look like maybe they put in a bottom, you need some rotation into some, almost solid, old school, industrial, big economy names if we're going to sustain a move higher, not just like a false breakout for a week or two.
And isn't this the thing that when and I often talk about this, when you see market, tops, or you think the market at the top is coming, it's usually when money starts flowing out of stocks altogether. But we're not seeing that here, and it always seems like there is sectors that are picking up the money. So if we're selling, a little bit of money, taking some profits in some of the biotechs or in some of your other leading sectors, it is flowing into other sectors. So that's a good thing, right, Tim?
That would be a healthy rotation. There's no doubt about it. And the market doesn't. The atmosphere of the market doesn't seem to be like a bubble. It's not like everybody and their brother you run into at every kid's softball game and an event you're at, and it is talking about the stock market.
Yeah, that's a great point there too. Because going back,
there are some things about it that are a little bubble-esque. I mean, some of the IPOs, some of the IPO price valuations are a little stretched, and there's certainly some little sectors within the market that you got to think, enough is enough. But overall, it doesn't really feel like we're in a bubble.
Yeah, the problem is you don't know when you're in bubble until it bursts. But just wanted to get your thoughts on crude oil and the oil sector here. It kind of perked up as of late here. Some of the oil companies, ExxonMobil got a nice boost here. Little rumor that, or I don't know if rumor or talk that, they might increase their dividend for like the 400th time, in a row. But let's look at the crude oil chart, running into problems here at the $58 level. Then let's go into a couple of the big oils, ExxonMobil and Chevron.
Well, oil's had a pretty steady move off the mid-March lows. You've certainly had a lot of people say that oil has bottomed or saying that they said oil had bottomed a month ago. And that's helped quite a bit the S&P get to new highs by less than a point on Friday. You may have some headwinds near term. You've had the rig count. Now the rig count is down over 50% from a year ago.
Wow.
And that's a big deal, because when the rig count goes down that much, there's a pretty good correlation with a bottom being put in oil, because it's just eventually going to take supply off the market, although allegedly there is tons and tons of supply, sitting in tankers around the globe, and Cushing is just topped off. They can't put any more there. So, you could have, you've got to have some backing and filling a little bit here. It feels like we probably put in a bottom in mid-March, but now we've had a steady move, and we need to do some work before we extend that.
What about some of the individual oil stocks? Like, you've seen your big oil, Exxon, Chevron, held up okay. I mean, Chevron's come back. If you just consider where Chevron is, and this is impressive in itself. Chevron was at the highs $135. It's $110. It's not off that significantly, considering that oil's been cut pretty much in half from where it was, 2 years ago. So, what do you think of, Chevron, Exxon? They're both going to report here this week. What do you think of those individual stocks?
I think they're probably going to be okay. I mean, look, if you want the real juice, you're going to go, the real juice the last 3 weeks was in the oil service names.
Yeah.
Because they were just obliterated.
Yeah.
And, there were some pretty good calls from some of the boutique firms down in the Gulf region. And also, I think, from Morgan Stanley, not to plug them, but they did make a great call about 2.5 weeks ago that the oil service stocks are put in a low, and you're always going to get a higher beta move in names like that. For the steady move in Exxon, Chevron, the big multinationals, they're going to be steady. They're not going to have the volatility on the way down or on the way up. And you're not going to hear boo from them on the strength of the dollar is hurting earnings. In fact, if you want to go back over this earnings season, all these companies that were belly aching and all the people talking about to what degree the strength of the dollar was going to be a major problem for earnings, I haven't seen too many, that seems to have been a really overplayed issue.
Yeah. What about the financials? Because the financials have not really participated. I look at like a Bank America or even a Citi. These stocks are still significantly off their 52-week highs. JP Morgan, I know Goldman Sachs did hit one a little while ago, but what are your thoughts here on the financials? Obviously, that's been a lagging sector. Do you think some of this rotation could eventually move into these stocks?
You would think the market would have a hard time. Historically, the market's had a really hard time with a sustained rally without participation from the financials. I just think, and I hate to say it's different this time, but it really is, because the financials are they got nothing going for them. They've had to sell their high margin businesses. They've got constant pressure on them from the regulators. They've really become like the personal ATM machine for the government. At any time the government the question is not how much money the financials are going to make each quarter. It's how much the government's going to let them keep. Because anytime, they make a lot of money, the government comes up with another reason to fine them each $10 billion. And, they've just got no traction.
Moving on. I'm sorry.
The yield curve isn't, the thing that would help them the most would be if rates were starting to go up.
Which is funny, because historically a rate rise would hurt the financials, but I think you might be right, actually.
Well, historically a rate rise, historically they like a steep yield curve because they borrow it at zero and, lend at higher rates on the way up, and they have a big bond book, which a lot of that has been regulated away. And they've become low yielding public utilities.
Besides all the earnings we have this week, we do have a Fed meeting going on here, and now that
I know it's a huge week for macro data.
I know, and they've been kicking the can down the road. They've kicked it from March to June, now to September, maybe in December 2016. What are you looking for out of this Fed meeting?
I think you're not going to get a lot out of this Fed meeting. You're until the minutes come out. You're going to get a boilerplate statement similar to what you had last time. There's no press conference, so there's not going to be a Q&A. The real it's not going to have as much of a market impact as other Fed meetings might have. They've pretty much done that through all the Fed speakers the last 2 to 3 weeks that have been out on the stump. The bigger deal is really going to be initial GDP, Q1 initial GDP, also the same day as the Fed meeting. And, you had a lot of people after the durable goods report last week take their numbers down to, pretty much even the most bullish of the bulls, Joe Livornia, historically is a very bullish guy on the economy. He reduced his Q1 GDP number from positive 1.7 to positive 0.7 for Q1. Now, everybody knows that, and everybody's going to say Q1's always a laggard, Q1's always the worst quarter of the year, et cetera, et cetera. You're still talking about a number that's less than 1%.
Tim,
now, that'll be fuel for people saying, they're never going to raise rates till next year. I still think it's going to be September. I had thought it was going to be June, so I was wrong. But I still think there's going to be a rate rise before the end of the year. September is probably a better month for them to do it than December, and that's when I think it's coming.
Tim Anderson, Managing Director at TJM Investments, joining us live from the floor of the New York Stock Exchange. Tim, thanks for the outlook on earnings, the macros. We appreciate you coming on. We'll talk to you again soon.
Have a great week, guys.
Thank you.
Thanks, Tim.